Managing partner at Geosphere Capital Management joins us on the phone line from New York. Arvind, hi, good morning from Mumbai, and always a pleasure speaking to you. Before I ask you about the Fed, I wanted your thoughts on our own markets, because now we're less than 100 points away from a 52-week high, and we are seeing participation from the from the most unexpected corners, especially names like Reliance. How have you reacted to all of this?
Well, I guess it seems like, we are in a global optimistic rally, and India is certainly participating in it. And I think the fundamentals for India are that, the demonetization worst is behind us. And there's optimism that the next few quarters' earnings should start to show some acceleration. So we're optimistic on that, too. And we were, looking to use the sell-off as opportunity to buy some specific names that we like. So we're happy to see the rally, but we think there are some, the budget was a positive, so that has helped the fiscal discipline shown by the government. But we are a little nervous that the election results may not be as favorable as the market would like. But that's only more of a trading action. It should not derail the earnings recovery, and therefore the sustainability of the rally. We think fiscal 18 should show meaningful positive comparisons versus FY 17.
Well, Arvind, I wanted to ask you a little more to parse the Fed minutes, but I'll come to that in a bit. First, tell us about Reliance. I mean, has it ignited a brave rally, for the next several months, or was it a one-off? 10% on a giant like that?
Well, remember, this stock has done nothing for, I think, 3 years. So it's clearly been a huge laggard. And the two issues, major issues that have overhung this story is, one is the lack of, clarity on when some of these major projects on the energy and petrochemical side were going to come along. And the second and the bigger concern has been the massive investment that has been made on the telecom side, when that would pay off. So we have not yet got clarity on the energy and refining and petrochemical side, because those projects are still somewhat delayed. But I guess the announcement in the last few days about a major kind of a price, pricing for Reliance Jio, which was free so far, is clearly igniting hopes that maybe we will get meaningful returns finally starting to show up, or at least some returns starting to show up in Reliance Jio. And yes, that has started a rally, but I think, we remain cautiously positive, but we think things might take a little longer to play out. But
so you're not buying?
Cheap enough that we are not currently in Reliance, because we really are not comfortable with what the Jio bet represents, but we are trying to understand it better, because so far it's been, black hole. It could be interesting, but we're not there yet.
Okay, that's interesting. But you did say that you would use the market fall as a buying opportunity. What would you buy now?
Well, we think that there are specific companies in the domestic consumption space, some of whom have gotten hurt by or had some disappointing numbers in the last couple of quarters. We like those. We've continued to like cement. And I think, select NBFCs still look interesting to us. And I think Reliance, while we're not there yet, is one that is still, such a laggard from such a long period of time, that it's one we're going to kick the tires a little bit more to understand whether this is something that could be a turning point. So it's not out of the question for us.
Okay, Arvind, the other story that's playing out is something that actually CNBC TV 18 broke, that there are informal moves made by Kotak Bank trying to win Axis's hand, and that spurred other private banks as well to seek Axis's hand. The short point is the private sector area seems to be flexing its muscles for inorganic moves. You like anything in that space?
Well, we like NBFCs, but we frankly currently have limited exposure to the private sector banks. But I think that the private sector banks, if there is a consolidation cycle of, the two obvious laggards in the private sector bank have been ICICI Bank and Axis Bank. We're not sure whether something this large could happen because we don't have any historical precedent of such large private sector bank mergers. But if we were to see anything like that happen, I think that could be a catalyst for re-rating some of the laggards if they are going to combine with some of the other banks. So that's a very interesting story. And it's certainly something that was not on our radar screen, but it could cause re-rating of some of the lagging bank stocks.
You just said a while back that you're looking at some of these domestic consumption stories, to buy in the market. Would it be stocks like Asian Paints? Because now we're seeing once again, interest return into the paint sector. Companies like Asian Paints are sitting at about 5-6 month highs. Is that a space that you would be looking at?
Yes, absolutely. Names like that which have gotten hurt, or others who are generally in the kind of consumer space where we can find opportunities. Some of the names that have been hurt by Patanjali's entry have also gotten hurt a lot, and we think that tide may turn a little bit, and there could be interesting names there. So we think in general, domestic consumption is a story that is going to have legs. We also like some of the retail stocks that could benefit. DMart is coming public, and that's creating a lot of excitement in the retail space. But we like some of the value options to that that might still be available at reasonable multiples. That one looks like it's going to be a really hot deal from everything we've heard so far.
Well, I finally wanted to ask you, Arvind, whether you're impressed by the domestic liquidity story. We haven't got a lot of foreign money. But, domestic liquidity is fairly, abundant. And we just were reading out a Deutsche Bank argument which says that Indian investments in financial or household savings and moving into financial instruments is increasing at a rapid clip. Is that something you would bet on to continue? And therefore, what would be, for instance, your expected returns from an index level on a 12-month frame?
Well, it certainly is a very interesting story, which I think has huge secular characteristics as more and more, as real estate as an asset class has gotten somewhat derated significantly. And, so have traditional places like gold. So then it seems like for a long time, the Indian saver was staying away from the stock market for a long number of years. And now it seems like that is returning, and that appetite, once it comes, can last for a long time. So unless we get some shock which causes the stock market to correct sharply and scare people away, we think any minor pullbacks will be bought, and I think this fund flow will continue. So there is a real chance, we don't invest counting on that, but we keep that in mind. There's a real chance that valuations of Indian market could go, pretty far north of what people are used to seeing, not driven by FII money, which has kind of been the historical one, but I think this domestic liquidity story is absolutely one that has a lot of legs that is likely to continue for a long time.